And we're back on Niaga AWANI, and I'm going to proceed with international news with updates on China, where China have eased its epidemic restrictions. Diners are consuming steaming meals again in restaurants, and consumers are returning to shopping malls in Beijing. Such are the signs that life and businesses are picking up pace in the capital city amid the widespread adjustment in epidemic response following the release of 10 optimized measures on December 7 to better coordinate anti-virus efforts in economic development. According to local business player, the customer flow in December is much larger than that in November. Data provided by online food delivery giant Meituan.com showed that online reservation for sit-down meals of last week between December 19 to December 25th was up by 218% compared with the week before last. Among others, hot pot restaurants saw online booking up by 215%. Furthermore, the retail businesses in Beijing is also towing. Next, we have Toyota Motor Corp reported a 1.5% rise in November global vehicle output, reaching a new record of 833,104. Domestic production slid 3.3% to 266,174 vehicles, while overseas output rose 3.8% to an all-time high of 566,930 for the month. Toyota said global sales and production in November exceeded last year's levels due to solid demand, particularly in North America, and a recovery in parts supplies that had been impacted by COVID-19 slowdowns. The automaker reported earlier this month it expected to produce 700,000 vehicles in January and held to a produce goal of 9.2 million in the year through March. Toyota had previously expected to make 9.7 million autos this fiscal year, but was forced to lower the target in November as it struggles with rising materials costs and a shortage of semiconductors. That's still ahead of last year's production of about 8.6 million units. A South Korean newspaper reported late on Sunday Samsung Electronics plans to increase chip production capacity at its largest semiconductor plant next year, despite forecasts of an economic slowdown. The move contrasts with the scaling back of investment by rival chip makers amid falling demand and a glut of chips. Analysts have said that Samsung's persistent with investment plans will likely help it take market share in memory chips and support its share price when demand recovers. Samsung plans to expand its P3 factory in Pyeongtaek, South Korea, by adding 12-inch wafers capacity from DRAM memory chips, the Seoul Economic Daily reported, citing unnamed industry sources. It will also expand the plant with additional 4-nanometer chip capacity, which will be made under foundry contracts, that is, according to clients' designs, the paper said. P3, which started production of cutting-edge NAND flash memory chips this year, is the company's largest chip manufacturing facility. The newspaper said Samsung is planning to add at least 10 extreme ultraviolet machines next year. Russian Deputy Prime Minister Alexander Novak told state-tasked news agency Moscow is ready to resume gas supplies to Europe through the Yamal-Europe pipeline. TASS cited Novak as saying in remarks published by the agency on Sunday that the European market remains relevant as the gas shortage persists and they have every opportunity to resume supplies. The Yamal-Europe pipeline usually flows westward, but has been mostly reversed since December of 2021 as Poland turned away from buying from Russia in favor of drawing on stored gas in Germany. Novak also reiterated that Moscow is discussing additional gas supplies through Turkey after a creation of a hub there. He also said that Moscow expects it will have shipped 21 billion cubic meters BCM of liquefied natural gas LNG to Europe in 2022. President Tayyip Erdogan said on Monday the total volume of natural gas Turkey has discovered in the Black Sea now amounts to 710 billion cubic meters (BCM) after a new field was located and the previous find was revised higher. Speaking after a cabinet meeting, Erdogan said Turkey had discovered a new reserve of 58 BCM in the Kekuma-1 field, in addition to revising up an estimated volume in the Sakarya field to 652 billion cubic meters from the previous 540 billion cubic meters. Erdogan said as a result of the analysis of the data, they have revised the previously declared 540 billion cubic meter reserve to 652 billion cubic meters, adding that Turkey had drilled 13 wells in the Sakarya field. He said with our new discovery at Kekuma-1, the gas reserve in the Black Sea has risen by 170 billion cubic meters to 710 billion cubic meters. Erdogan said last month that Turkey is on track for the Sakarya gas field to go online in 2023. He also said on Monday that the newly discovered Kekuma-1 field would be connected to the Sakarya field and from there to the national grid. Turkey, which has little oil and gas, is highly dependent on imports from Russia, Azerbaijan and Iran, as well as LNG imports from Qatar, the United States, Nigeria and Algeria for the gas. A Mastercard report showed on Monday U.S. retail sales rose 7.6% between November 1st and December 24th, which encompasses a majority of the holiday season. As steep discounts attract deal-hungry consumers, the increase is higher than the 7.1% growth Mastercard had forecast in September, when it anticipated consumers would pull purchases to October in the hunt for early deals. However, this year's holiday retail sales growth is less than the 8.5% increase last year, as decades-high inflation, rising interest rates, and the threat of a recession turned consumers cautious. Retailers including Amazon.com and Walmart in the United States offered large discounts during the holiday season to get rid of excess stock and bring back inventories to normal levels. That led to strong demand for everything from toys to electronics during the 5-day long period between Thanksgiving and Cyber Monday. However, according to the Mastercard Spending Pulse report, sales of electronics dropped 5.3% over the broader roughly 2-month period, but sales in the apparel and restaurants categories rose 4.4% and 15.1% respectively, helping boost the overall number. Online sales jumped 10.6% in the period, slightly less than the 11% increase last year, the Mastercard report said. A major measure of the inflation expectations of South Korean consumers hit a 7-month low in December, underscoring the market's view that the Bank of Korea's policy tightening cycle is nearing an end. Consumers expected inflation for the next 12 months to be a median 3.8%. The Bank of Korea's monthly survey showed down from 4.2% in November and the lowest since 3.3% in May. In the same survey, the Consumer Sentiment Index CSI rose slightly to 89.9 in December after 2 successive months of decline, to 88.8 in October and 86.5 in November from 91.4 in September, it said in a statement. The Bank of Korea was among the first major economy central banks to begin raising interest rates in August last year and has up to November raised its policy rate by a total of 275 basis points in 9 steps to 3.25%. In the latest Reuters poll, the majority of analysts expected the Bank of Korea to raise the rate once again in early 2023 to 3.5% and then stop its tightening cycle. Bank of Japan BOJ Governor Haruhiko Kuroda on Monday brushed aside the chance of a near-term exit from ultra-loose monetary policy, although markets and policymakers are signalling an increasing focus on what comes after Kuroda's tenure ends. Investors have continued to push up Japanese government bond yields on expectations the BOJ will phase out its yield control under a new governor when Kuroda's second five-year term comes to a close in April of next year. The shift in attention towards a post-Kuroda era was also evident in comments by Prime Minister Fumio Kishida on Monday that a decision on whether to revise Japan's decade-old blueprint for beating deflation will be made after a new BOJ governor is appointed. The BOJ shocked markets last week with a surprise widening of the allowance band around its 10-year JGB target, a move that aimed at easing some of the costs of prolonged stimulus. Kuroda said in a speech delivered to the business lobby Kindaran, this is definitely not a step toward an exit. The bank will aim to achieve the price target in a sustainable and stable manner, accompanied by wage increases by continuing with monetary easing under yield curve control. That's all for Niaga AWANI. I'm Nina Rozman. Stay tuned with astrawani.com.